what you need to get approved for a home loan. Are you ready to buy a home? Are you tired of living in an apartment? Ready to get your own place and your own land? Well, real estate ownership is still the #1 way to wealth. And so let's talk about how you can start getting your property so that you can grow your wealth. Let's go. I'm going to share with you the 5 things that you really need to show a lender so that you can get approved for your first home loan. I'm going to tell you what the best type of loan is for your situation. And I'm going to share with you some real world experiences from my time as a mortgage processor, as a mortgage underwriter, and then as a vice president in mortgage banking. Some secret insider tips that no one knows. So let's talk getting approved for a home loan. So when we are talking about getting approved for a home loan, we're going to just talk about how to buy a primary residence and how to get approved for a primary residence home loan. So when you apply for a mortgage home loan for you to live in, that is considered a primary residence. If you were purchasing a home and you did not plan on living there, you were just going to visit there every now and then, that would be considered a second home. Or if you were making it just for an investment, that would be considered an investment loan. And so with each different type of loan, depending on your occupancy, whether you're going to live in the property or whether you're not going to live in the property, that is a risk factor. So one of the lowest risks is if you were going to live in the property. So that is like the easiest type of mortgage loan to get approved for, is a loan for a property that you're going to live in. And when I say easier, meaning most banks do them, okay? You're going to be able to find lots of banks and lenders that lend on primary residences. You're going to find that they will lend you very high LTVs or loan to values, where they will give you, in most cases, most of the money to buy the home. And they're going to have really low interest rates, 3%, 4%. In many cases, you don't have to spend a lot on the interest rate. And again, it's a home for you, so it's considered lower risk because they feel like if you are going to live in the property, then you are more likely to pay. Okay, so just giving you the basics of how mortgage lending works and what lenders are looking for. And depending on whether or not you're going to live in the property, that affects your loan application process and what you will need. So for the purpose of this conversation, we're just going to talk about getting approved for a home loan for a property that you're going to live in. So before you actually go and find the home of your dreams, in most cases, you are going to do what's called a pre-application. You're going to do a pre-approval process with a lender, okay? So before you ever go find your dream house and you go out with a realtor, they're going to ask you to get pre-qualified with a mortgage company, and they're going to give you what's called a pre-qualification letter or a pre-approval letter. Now, I'm not going to get into too many different details about that because there is a difference between a pre-qualification and a pre-approval. But for the sake of this conversation, we're going to just go with the full pre-approval, where they look at your income, they look at your pay stubs, they kind of just make sure that you really truly can buy a house. And so there's 3 different types of loans that you're going to be primarily going for. There are government loans, which is probably what most people, most first-time home buyers get. There are FHA loans, which stands for the Federal Housing Authority. And they have very high loan to values, where it's usually almost 97%. So you as the borrower only have to bring 3.5% to the table. And in many cases, they have down payment assistance programs. So again, this is not for everyone. Everyone's not going to qualify for a down payment assistance programs, but there's a ton of them out there where you don't have to put any money down. They will lend you almost all of the money that's required for you to buy the home. You just have to come up with a few $100s for maybe the appraisal and the insurance and things like that. So when we're talking about, that's one type of loan. Those are FHA loans, and that's pretty much most people in the world. Most borrowers can get an FHA loan. If you were a veteran, for example, there's Veterans Associations loans, VA loans, and then there's called USDA loans, which are for like rural areas. Those are your 3 primary types of government loans that are available at most lenders, okay? Now again, you don't go to the government and apply for these loans. You go directly to your lender and they will get you these government-backed loans. Again, most people do FHA loans, and so those are some of the ones that we'll talk about a little bit later that are the easiest to get qualified for. Now, there's also conventional loans. Conventional loans are through backed by Fannie Mae and Freddie Mac. You may have heard of them. But again, you don't go to Fannie Mae and knock on their door and apply for a loan. You go to your lender and they have those loans available for you, and then they are backed by Fannie Mae and Freddie Mac, and they follow their guidelines. So just kind of giving you the overview. And then we have regular loans that the bank has themselves. They're private loans. In many cases, they may be called non-QM, non-qualified mortgage, or even subprime is coming back now. And there's a lot more loans available for the subprime market if you have bad credit, or if you're not able to prove your employment, or maybe if you're self-employed and you didn't file all of your income on your tax return, things like that. They have loans that are called Alt-A, which is alternative to the A paper, which is alternative to conventional. And they also have higher interest rates though. So it's a little bit more risky, but usually these are for people that cannot prove all of their income or their assets and things like that. So those are the three primary categories of loans. Again, government loans, conventional loans, and then subprime / Alt-A loans. Those are the main types of loans that there are available for you guys, just to give you a quick overview. So let's talk about what lenders are looking for. So in any case, whether you are getting any three of those categories of loans, in any case, the lender is looking to see if you are able to repay that loan, okay? And every single lender, all the mortgage processes, different companies, they pretty much have the same process, okay? You apply for the loan, you submit some documentation, there's what's called a loan processor. She will order some things, or he will order some things, some documents, and verify a couple of items for you. Then there's an underwriter, that's the person that approves or denies the loans and reviews all of that documentation and makes a final decision. And then once they finally approve the loan, after reviewing all of the documents that you've sent and the appraisal and things like that, then the loan moves to the closing department, okay? But let's talk about the meat of that. The meat of that is the processing of the loan. This is where most people say, well, what do you need? And for the most part, it's documentation. It's going to be things like your bank statements, the last 3 months. It's going to be your pay stubs, showing, if you have pay stubs, showing what you've earned. It's going to be your W-2s from the previous 2 years, or your tax returns, showing the income that you have reported to the IRS. Those are the things that lenders are looking for, because what lenders are trying to do is establish the level of risk that you as a borrower presents. And so they're looking to see if you have the ability to pay them. And again, I won't go this long thing. I actually used to be a mortgage underwriter many, many moons ago. I'll share with you really quickly. I actually was a mortgage processor as well. And I still have my mortgage loan officer license, among some other credentials that I have. So I've worked in the mortgage industry for over 18 years. I still have many friends that work in the business, and I'm connected to a very large group. And essentially, I actually even own a portion of a mortgage company. So I'm telling you this full transparency. I know a lot about mortgages and how to get approved for them. And I'm going to tell you though, they're looking to see if you can repay the loan. And so they have what's called the 5 C's of lending, where they're looking at your credit and they're looking at the collateral. That's what the appraisal is going to do. They're going to evaluate the property through an appraisal to see how much the property is worth. There's going to be inspections that are done on the property to make sure that the property is in good working condition. But they're really looking at you. When we are talking about getting a loan for yourself, for a primary residence, most of what they are looking at has to do with you as a borrower. Are you able to repay that loan? And how they determine that and answer that question is, how have you paid your bills in the past? That's your credit. And then what is your ability? What is your capacity to pay? Do you have a stable job? Do you have stable employment? Is your income enough to cover the mortgage and the expenses that comes with owning a property? That's what the mortgage underwriter is looking for. So when you're talking about what's needed, it's the documentation related to that. And they will give you what's called a condition sheet that lists out all of the documents that you will send to them. So really quickly, the conditions. This is one of the 5 C's of lending. So the 5 C's stands for credit, collateral, capacity, conditions, and capital. So the capital is your down payment. The conditions, those are what we're talking about. Those are the conditions of the loan. You know, what's your letters of explanation? What has happened in your situation before? They're going to ask you for conditions. They're going to ask you for documents. They're going to ask you to provide documentation to support that you can repay the loan. That is really the crux of what you need and what you'll provide. The other things that you provide for the loan process, the lender will either order or your processor will order and things like that. Your loan officer may order some of those things, but the conditions, that's going to be what's your responsibility. If they ask you a question like, hey, why do you have these inquiries on your credit report? Meaning, why did these people look at your credit? You're going to have to write a letter and explain, oh, well, I was shopping for a car, or I was, checking that out, or I moved around. They may ask you about different places that you've lived. There's different things that the underwriter is going to ask you for. These are called the conditions, and you are going to be responsible to providing what they need. Nothing more, nothing less. Don't start giving them extra stuff, things that you may think may help. No, no, no. Just follow the condition sheet. Talk with your loan officer if you have any questions, but do not just start submitting documents to the lender. You can easily get denied by accident. So I am having an awesome 3-day training event called Grow Your Wealth. And I invite you at this time to go to 𝗏yourwealthevents.com and check it out and start getting tickets for the event. I would love to meet you guys in person. I have all of this content right here for free, but I would love to meet you guys and teach you 3 full days of training with a full workbook. It's a small class where there's enough time to answer questions, where we can eat lunch together, and I can really teach you in 3 days the entire business so that when you leave this training, you can leave with a plan of action for your real estate investing. So if you are serious about investing in real estate and you really want to learn from someone that has real experience and real education and is doing this and is willing to share all of this with you and show you my properties, then this event is for you. Again, it's 3 full days of training. Please check out the link below and get your tickets. I would love to see you guys in person. This is Noelle, to your success.